Welcome to my video about Vale stock. Vale is a Brazilian multinational mining company that is listed on the New York Stock Exchange under ticker symbol VALE. It is one of the world's largest producers of iron ore, as well as one of the largest producers of nickel, copper, and other metals. In this video, we will provide you with an overview of Vale's business, its recent financial performance, and its future prospects. We will also take a closer look at the company's stock and provide you with some insights into what investors should consider before investing in Vale. So if you are interested in learning more about Vale stock and how it fits into your investment strategy, be sure to stick around until the end of this video. Let's get started with the model. This is a large cap company, 70 billion market cap. They're trading at $16 a share and they have 4.4 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Look at their free cash flow in 2021, nearly 21 billion. It dropped to 6 billion in 2022. The company's profitability is really dependent on the price of iron ore. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was negative in 2019, a big positive in 2021, 25 billion, and it's pretty high in 2022 at 17 billion. Revenue is a sales for the company, and that peaks in 2021 at 55 billion. It drops to 44 billion in 2022. This is their income statement. The top line is the revenue, the sales. That was 43.8 billion in 2022. Let's dig into that number a little more so we know what it is. Of the 43.8 billion, 35 billion was from iron, 28 billion from iron ore, 6.3 billion from pellets. They also generated a lot of revenue from nickel, 4.3 billion, copper is 1.9 billion, and only $500 million from gold. Let's look at their revenue breakdown by geography. Since China uses so much iron ore, mainly from building so many homes, that's their biggest revenue generator, 22.2 billion in China. That is down from 2021 at 28.6 billion. North America is 2.2 billion, South America 4.7 billion, Brazil is a big revenue generator, and Europe is 5.4 billion. The country in Europe that generates the most revenue is Germany, 1.5 billion. Then Italy, 700 million. Below revenue is the cost of revenue. These are all the expenses directly related to generating the revenue. Revenue minus cost of revenue gives you your gross profit, and that's down a lot from 2021. It was 33 billion, now it's 20 billion. Then you have your operating expenses. These are all the expenses not directly related to generating the revenue. Gross profit minus operating expenses gives you your operating income. That's also down a lot from 2021. It looks like they're cutting their debt. They did pay 2.5 billion of interest on their debt, down to 1.5 billion in 2021, down to 900 million in 2022. Then you have other income and expenses. These are all the gains or losses not part of the company's core operations. It looks like they had a lot of asset impairments in 2019. That's why they had negative net income. And their net income in 2022 is 19 billion, down from 22.5 billion. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. You could think of operating cash flow as net income converted to cash, because net income is your accounting profit or loss. So they only generated 11.5 billion of cash flow in 2022. That's less than half of 2021 and lower than 2019 and 2020. Then you have capital expenditures, which are investments in property, plant, and equipment. When they have to buy the location for a mine and do all the drilling and all the construction, that's part of CapEx. Operating cash flow minus CapEx gives you your free cash flow. And their free cash flow is low in 2022 compared to 2021. They do pay a nice dividend, but another way to reward shareholders is to buy back stock. They bought back 6 billion in 2022 and 5.5 billion in 2021. When a company buys back capital stock, that reduces the shares outstanding and makes your shares more valuable. Let's look at the capital structure. They have 36 billion of equity, 15 billion of debt. They're 70% equity, 30% debt. Their net debt is 10.5 billion. And I gave them the highest whack on Finbox. and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 102 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $93 billion. We divide that by 4.4 billion shares. And we get a calculated stock price of $21. They're trading at $16, so they're trading at a 25% discount. It's a buy according to the model. Their revenue forecast for 2025 is 217 billion Brazilian reais. When you convert that to US dollars, that's 61 billion. Their revenue forecast for 2024 is 59 billion. For 2023, it's 61 billion. I continue this trend into 2026 and I got 62 billion. That's how I got their future revenue estimates. They convert on average 26% of their revenue into free cash flow, so I multiplied their future revenue estimates by 26%. That's how I got their future free cash flows. The website Simply Wall Street values the company at $15.54. They're saying it's 2.6% overvalued. 7 analysts priced this stock and the average price target is 19, the lowest 14, the highest 22. This is where the stock has been trading the last 5 years. So it did get up to about $23 a share. That was in mid-2021. And it got really low during COVID. It looks like around $5-6. But it kind of moves up and down, but you get your stable dividend payment, and they usually pay a really nice dividend. This bottom chart is the price of iron ore for the past 5 years. So you can see their stock price is pretty close to the price of iron ore. When iron ore gets really high, the stock price goes up because the company makes a lot of money. And when iron ore goes down, so does the stock price. So it mimics it pretty well. The 3 largest mining companies in the world are Vale, BHP, and Rio. Look how close these stocks mimic each other. BHP is up 60% in the past 5 years, Rio is up 33%, and Vale is up 24%. So Vale seems a little more volatile than the other stocks, but they're almost identical. Here's a chart of their dividend yield the past 10 years. The yield got up to about 16% in the beginning of 2022. The forecast is for the yield to be 4.7% by 2025. The last dividend they paid was 35 cents. They did pay a special dividend back in September 2021 of 156 because they were making so much money. And their current yield is 9%. The way you calculate that, you take their last dividend payment, 35 cents, multiply it by 4, that's $1.40. Take that number and divide by the current stock price. That's 104% of their free cash flow, 37% of their net income. They have a pretty low beta, 0.8, so the stock moves less than the market. They're down 23% in the past 52 weeks, while the S&P is down 11%. The 52-week low is 12, the high is 21. And the stock is trading between its 50-day and 200-day moving average. This is a pretty popular stock. Well over 20 million shares are traded each day. Of the 4.5 billion shares outstanding, 4 billion are on float, 22% are held by institutions, and 1.25% of the shares are shorted. If you bought this stock 10 years ago, you'd be in the red for the first 6-7 years. But if you kept holding on, you'd be in the green. You'd be at $16,000 today. That's a 5% annual return, a 65% total return. This is assuming you reinvested the dividends back into the stock. 74% of the companies held by institutions, 16% by the general public, 10% by public companies, and 0.02% by employees. Their biggest shareholder is Capital Research at 15.5%, then the Capital Group, 14.5%, Banco do Brazil, 9%, BlackRock, 7%, and Mitsui & Co. 6.4%. The best way to look at ratios to compare them to companies in the same industry. There are 37 companies in the same industry as Vale, and if Vale has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They spend a ton in CapEx, a little less than BHP. Their debt to equity ratio is a little higher than average. For every dollar of equity, they have 40 cents of debt. They pay a super high dividend, 9%. BHP pays 10%. They do generate lots of cash flow, $6 billion, but a lot less than BHP. They rank second in market cap to BHP. For some reason, Rio Tinto didn't show up on the list. I use this website to pull data, and it seems like they miss companies once in a while. They have a really good price to book, price to earnings, and price to free cash flow. Their price to sales is worse than average. They generate lots of revenue, $44 billion. They do generate more revenue than BHP as a percent of their market cap, since their price of sales is lower, and they have a really high ROA and ROE. So in summary, I have the company trading at a 25% discount, and their 2022 was not nearly as good as their 2021, but so much of the company's success is dependent on the price of commodities, mostly iron ore. I ranked their free cash flows 4 out of 10, their revenue 6 out of 10, and their ratios 9 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.